Okay, so in the previous session, we were talking about banking and okay, so we were talking about banking system and the history of banking, how it has been developed in our country. So today we are going to start on with a brief introduction on banking system. Today we are going to start on understanding how is the whole financial system in our country and what is the role of this banking in that financial system of our country. So these are some things which we are going to discuss as a part of unit 1 of your syllabus. So for today's agenda, we have 4 topics to be discussed. That is one, what is the financial system prevailing in our country? Second, major components of the financial system. Third point is an overview of the financial markets in our country. And the last agenda for today's class is classification of the financial markets. Okay, so the banking institutions and financial services, these are the topics which we are going to discuss for the next session. Yes. So what is this financial system? So for any country, when you consider it's a development or anything, this financial system acts as a nervous system. Just like in our body, there is a nerve system which connects every part of the body. You know, the same way this financial system is a kind of a nervous system of the country's economy here. So the nation's economic development mainly relies upon how effectively this and efficiently this financial system activates or it performs. So if it is more active, if it is more effective and it performs better, that means nation's economy is healthy. So if there are any loopholes, if there are any scandals or scams or whatever you can witness in this kind of financial system, yes, it erodes. That means it disturbs the whole country's economy. So that is why if the country has to have a strong economy, first thing is the financial system has to be very strong. So what is this financial system? Financial system is something which includes your financial services, your financial markets, financial institutions. So these are some things which come under this financial system. And when we talk about financial services, we have lot of companies giving these kind of services. It may be related to venture capital, it may be related to asset management, asset liability management service, right? So these are some services provided by financial institutions in our country. Then we have financial markets where trading of shares and debentures happen. Okay, so that is also a part of this financial system. And when we talk about financial institutions, we have banking systems, okay, and developmental banks also. Okay, so there are regular banks, commercial banks, and developmental banks like IDBI and all, which help the country's economy to flourish, right? So it is very important that every country should have a very well developed systematic financial system. Our country is a developing country, so there are some loopholes in the financial system. And to strengthen that financial system or banking system in our country, recently the mergers in the banking system happened. So by doing that merger, what happened, it strengthened the whole banking system of our country. So biggest banks together came and they became more bigger now. So they were able to handle the foreign markets very easily now. So that need for a well developed financial system is very much essential for the development of the country's economy. Then this financial system helps in mobilizing savings and converting them into investment. So I have always told it many a times that if you keep the money in your lockers, in your under the bed or in the bathrooms or hidden somewhere in your house, it is not going to help the system at all. You need to always mobilize the savings and you need to convert them into investment. How can you mobilize these savings and convert them into investments? So you may have to invest in shares, mutual funds, fixed deposits, recurring deposits, right? So if you deposit them in the bank also, it is a kind of an investment. The reason is you'll be getting interest rate on it. So it is very important that the currency circulates as much as possible in the market, so that it helps the country to make more profits, and it also helps the government to gain capital so that it can be invested in some other projects. Then, other than that, this financial system also provides the required capital to the businesses. So, by raising funds through shares, debentures, or by taking loans from the banks or big financial institutions, what happens? The new businesses will be supported in the form of capital investment. So, by doing so, what happens? The industry starts flourishing, the GDP of the country starts growing, the export business starts increasing, the import starts lessening down, right? So these are the results which you get when capital is being raised and it is being invested into businesses. Then the same financial system also helps in generating the income and profits here. Uh, so if at all I invest in shares, okay, in the form of dividends, I will be getting returns. So if I keep the same amount in the lockers in our house, will it give us profits? It is not going to give us. So it is very important that you invest that money and try to gain more profits. At the same time, it also helps to increase the living standard of the people in the country. So the more the income, the more the profits, the living standards of the people of the country will also improve with that. So such is the kind of chain reaction which you can find in the financial system as for today. Yes. So before going ahead with the major before going ahead with the major components, let us try to understand some important functions of this financial system. So, as I told you, the first thing is all these financial systems mainly help in mobilizing the funds. So, when you try to consider the financial system, so these four, I hope you can see the one which is highlighted in the red color. So, these are the major components of the financial system. It is financial institutions where your banks and all come into picture. Then comes financial markets, wherein your second capital market and money market comes into picture. Then we have these financial instruments, okay, debentures or government instruments and all. Then we have financial services where leasing, hire purchase, factoring, then asset liability management, such kind of services are given by some financial expert institutions. Okay, so these things, these four major play a very important role in the financial system. So here the main functions of all these institutions is try to mobilize the financial resources of the country as much as possible, keep them under circulation. So if the money is under circulation, the money is going to work and give you more benefits or profits. Okay, then the second function is to ensure effective allocation of resources to different investment channels. So it is not that, see, the financial system of the country should be very balanced. It is not like you strengthen the banks and you neglect the other areas. It is not like that. You need to bring out some balancing by allocating the resources effectively to all these investment channels. Okay, so to minimize the risk and to maximize the profits, it's very important that you balance your allocation of the financial resources in the country. So that is one more function the financial system plays. Then it also generates disposal income in the hands of the people, which in turn will help in the exchange of goods and services. See, let us take, for example, myself, I have invested in shares. So by investing in shares, luckily I got profits in the form of dividends. So what happens when I got profits? I am having some disposable income in my hand, and using that income, I can again go ahead in buying the goods and services from some other sectors. So that is what I told you. It is a kind of a chain reaction which you can find here. So if at all this system would have not been there, there would have not been any market only existing in the country. So whatever kind of changes are happening in these four financial systems, uh, it is going to affect the other institutions in the country. Institutions in the sense businesses, small businesses, big businesses, organizations, whatever it is, everybody will be one or the other way affected by the disturbances happening in these financial systems. So that is why it generates a kind of a disposable income in the hands of people, and when they have income and profits, what do? They start investing, they start buying products, they start buying materials, goods, whatever they require. And by doing so, you are creating profit for those businesses also. So that is how this chain works. Then it also plays a very important role in transferring the resources, the financial resources, from one part of the economy to the other part of the economy. So here you trade shares, you trade debentures, you trade in foreign exchange currencies. Okay, so by doing so, what is happening? You are transferring the resources from one person to another. Okay, or one economy to the another, or one organization to another. So this facilitates mobilization of funds, which is very, very essential in the economic development. So as I told you, when you have money, you start buying goods, you start getting more services, and they also start making more profits. So as it is a kind of a chain reaction, it accelerates the rate of economic development of the country. So that is one more major function of a financial system. Then this financial system also facilitates in passing the information related to these financial institutions. Okay, so let us say if I have to invest in share market, so the NSE and BSE stock trading this one bodies, they give us information about which are the companies which are making profits, which are the companies sectors wherein growth is more, right? So this information passing on to the public, that also role is played by this financial system. Then it promotes self-employment and also improves the employment level in the country. So when mobilization of fund is available, of course, it is going to generate opportunities for employment. So these are some major functions which you can find supporting the economic development of the country. So that is what is functions. Then coming to the major components. So how is this sorry, yeah, how is this financial system designed in our country or classified in our country is what we are going to look for now. So the major four areas what you can find here is the financial institutions, we have financial markets, we have financial instruments or assets, and we have financial services. As far as our subject is concerned, we are concentrating more upon financial institutions and financial services. So these are the two major components for our syllabus, banking and financial services. Banking come under financial institutions, financial services here. Okay, so these two things we are going to discuss. The other two areas which will be discussed, I guess, in the subject of investment management. Okay, so there you will be getting the information about the other two aspects of the financial system. So yeah, so what are these financial system classified into? So as I told you, financial institutions basically concentrates more upon banking activities, okay, and non-banking activities. So here, banking institutions like your commercial banks, cooperative banks, regional rural banks, then your foreign banks, okay, all these come under what I can say, banking institutions. Okay, so other than that, there are non-banking institutions like we have these insurance companies, mutual funds, or also we can call them as. Then the same banks, we especially when we talk about this commercial bank, you can sorry. Okay, so this commercial bank is our interest. Okay, so our area of interest. So this is classified into private sector and public sector. So public sector, all the recent nationalized banks, SBI, all those come under public sector banks. ICICI and other HDFC and all come under private sector banks. Okay. Then coming to the second category, that is your financial markets. So we have two sectors here, unorganized sector and organized sector. But the healthy one, which is safer side, is the organized sector, which is again divided into capital markets and money markets. So when we talk about capital markets, we have something called a secondary and primary market. So hope you have you know about how shares are being launched into the market through the form of IPO, initial public offerings. So those offerings, initial public offerings, for the first time issued in the market for selling the shares is nothing but the primary market. Okay, first time when the company sells its shares to the customers, so that there that market is called as the primary market. But retrading, whatever happens, no, somebody takes the shares and they sell it and some other person buys that, so that happens in the secondary market, your NSE, BSE, stock exchange agencies. So there it is called as secondary markets. Primary markets basically are your direct from the company. Okay, so directly from the company, whatever shares or debentures are being sold in the market, so that market is called as primary market. So these are about, this is about a bit of financial markets. Then coming to these financial instruments, financial instruments are like they are the part of these financial markets itself, like shares, debentures, bonds, certificate of deposits, all these things are nothing but financial instruments. So they are the part of these financial markets, most of them. So here, these then comes here financial services. So this is one more important topic which we are interested in for our syllabus point of view. So we have two things here. One is fund-based service and second one is fee-based service. So if it is a fund-based service means we are going to go in detail. So I'm not going to discuss too much right now. So services like leasing, hire purchase, consumer credit, bill discounting, factoring, insurance, all these facilities are given through fund-based services. So let us I'll take one example, that is leasing. So let us say that a financial institution has given a loan to somebody and that person has not given back the loan. Okay, so to start a business or whatever, the purpose is different. So with that loan amount, what that person has done is he has bought some manufacturing unit. Okay, a big manufacturing unit, but because of some financial issues, some maybe he is not unable to make profits, he is unable to now repay the amount to the bank or financial institution or whatever it is. So now the financial institution will take on that manufacturing unit under it, okay, under the authority of itself. And instead of keeping it idle, what they do is they lease that infrastructure to some other party. And by doing so, they start getting profits every month, every 6 months, every yearly leasing rent is being paid by the new agency or new business organization to these financial institutions. So such kind of arrangements are made. We will discuss these things in detail little bit later in the syllabus. So such kind of arrangements are made by the companies giving these financial services. Then at the same time, there is Exim Bank, okay, Export Import Bank of India, which gives you insurance facilities for your export import business. Okay, so they cover insurance uh, on your export import business. If there are any losses, Exim Bank is somebody who can help you to come out of it. So such kind of facilities, but yes, that is what I told you, fund based or fee based kind of facilities are being provided by these financial services companies. Yeah, so this is how the classification of the financial system in our country prevails. Yes. Any doubts till now? Kindly let me know. Okay. So next what we are going to discuss is a little bit overview of the financial markets. So here these financial markets, it's not like this physical place here. It is, yes. Yeah, it is a place or it is a systematic mechanism which facilitates the transfer of resources from one entity to the another. So something like exchange of financial instruments like shares and debentures, etc. So here trading happens wherein you buy and sell shares and debentures. So such facility is called as a financial market. So these main functions of financial market are the economic functions and the financial functions here. So when we talk about the economic function, when it comes to economic functions, it facilitates the transfer of real economic resources from the lenders to ultimate borrowers in the financial system. So just a minute. Yeah, so it facilitates the transfer of what happens, real economic resources from the lenders to ultimate borrowers in the financial system. So let us take if there are no systems like shares or debentures or anything, it would be very difficult for the business organizations to raise fund for their businesses. So these are borrowers and the lenders are ultimately we people who buy these shares and debentures. Okay, so if we both do not play our role correctly, it becomes very difficult for the business organizations to run or flourish in the market. So as an economic function, there is a role for a lender and there is a role for a borrower here. So that is one thing. Second, uh, when I, it is nothing but even though if I buy the shares, it is nothing but in some or the other way I'm lending money to the business organization. So here we will be earning profits out of it. Okay, the lenders are we here, borrowers are the organizations, business organizations. Please understand that. So the lenders will earn profit in the form of dividends. If there is some surplus amount with them, they can always invest this amount in shares and debentures rather than keeping it in the lockers. So it is very important because it enhances the national income of our country. So it is said that every newborn baby is having around 8,000 rupees of loan on its head itself. Okay, so such is the loan of our India in terms of from through the World Bank. Okay, so IMF, International Monetary Funds, or through World Bank, such is the loan being taken by the country. So it has to be reduced. Of course, if you bring out money from all the accounts of the corrupt politicians or business people, yes, a day will come where not even a single person will be in debt. So such is the big amount which is literally like rottening in the lockers of the rich people. So here it is very important that you mobilize these funds as much as possible so that you can make more profits out of it. Then borrowers, what do? They use these funds to start new businesses, to start new ventures, ultimately increasing the income of that company, and it increases employment. By increasing employment, what you're doing, indirectly or directly, you are increasing the standard of living of the people. So that is one more economic function you can find. So here, by borrowing those funds from us in the form of shares and debentures, they invest that money into some other businesses. And when they invest it in new businesses, new employment gets generated. And when people start getting employment, their standard of living somewhere improves. So this is one more economic function. Then it serves the economy and finally the welfare of general public in the country. So which should be more, whether it is export should be more or import should be more, which is healthy for the company? One of you please answer the question.
Export should be more.
Yes.
Export should be more.
Very good, very good. Yes, it is very important that any country's development is looked into what is the quantity of export and import they are involved into. So the more the exports, the healthier your country's economy will be. Okay, so you have to reduce the imports as much as possible. Try to be more independent compared to increasing your exports in the foreign markets. So that is very, very important here. So here, by doing so, of course, the companies will flourish, the country's economy will also flourish. And when the country's economy will flourish, everything will be in normal. That is, flow of funds will be there, businesses will be running smoothly without any hindrances or problems. When everything goes on very good, when everything goes on very healthy, obviously the general public of the country will also be healthy. The welfare, you can witness welfare of the general public in the country here. Then another economic function is it provides a channel through which new savings flow into the capital market, which facilitates smooth capital formation in the country's economy here, right? So these financial markets, they create a kind of a channel wherein people can invest their savings, new companies can be created, new capital is formed here which can be invested in new businesses, new ventures, okay, which can ultimately help the country to increase its exports, increase the business, create employment. All such kind of benefits you can find by mobilizing the savings of the people. Then we have this financial function. So here, these financial functions basically here it provides the borrowers with funds which they will invest in some other productive purpose. So through financial markets, you raise capital, you raise money in the form of shares and debentures, and the business organizations can use this fund for somewhere to invest in, okay, for a better purpose, for a productive purpose, for new ventures, right? They can invest that money to gain more and more profits. So that is one financial function of a financial market. Then it also provides lenders with productive assets so that they can invest in productive usage without necessary of direct ownership of the assets. So if you are owning around 1,000 shares of some company, that means somewhere to a small extent, you are like a owner of that company. It may be not direct ownership, but yes, indirectly, you are a small owner of that company. So it provides the lender to become the owner of that country. You can use your savings to become the owner of that company, owner of that asset of the company. So that is one more function, financial function, what you can witness through the financial markets. Then it also provides, the third function is it also provides liquidity in the market through which claims again and again here the money can be resold by the investors at any time, and thereby assets can be converted into cash. Which is one form wherein you can get highest liquidity, where you can invest and get immediate and fast liquidity in the market. Where can you invest money where you can get immediate or fast liquidity from the markets?
Shares, maybe.
Yes?
Maybe
Anybody?
shares.
Shares?
Bank. Bank.
Bank? No.
Government bonds.
No. Immediate liquidity?
Stock market.
No. Stock market
Gold.
also? Yes. Who told that?
Rahul.
Yes, it is gold. Okay, gold is something which is like more stable in terms of prices. Share markets, if the share market is down, it will be a big loss for you people when you are selling your shares to liquidify the funds. Okay, but gold is something where the market is not so volatile. That is, too much up and down will not be happening. Of course, it is in always a positive growth, where if we start witnessing from the last 20-30 years, you can see gold is growing only. It is not coming down too much. So immediate liquid cash, if you want, the people prefer to invest in gold. Okay, so here through investing in shares also, as somebody said, it is also one way of getting liquid cash immediately from the market. But conditions apply here. The share market should be balanced. The share market should be not too much volatile. Okay, it should not be moving up and down too much. That variation should not be there. It should be little bit stable. Then getting liquidified your shares becomes very easy. Okay, I'll stop here. There is another meeting already scheduled with the same password and meeting code. Okay,